Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Joining me today is Joeri Wouters, who we'd like to welcome back to the show, Senior Fixed Income Trader at KBC Asset Management. Joeri, welcome back.
Hey, thanks for having me back.
Can you tell us a bit about what you saw in February in terms of trading volumes and any volatility in the market, please?
So February was a, relatively speaking, quieter month on our desk with regards to credit trading. We heard in the market that general liquidity was low, with some very low volume days, more the kind of days you would expect in summer or December. And that liquidity was also quite patchy because absolute spread levels were still very tight. People were looking at the primary market. But by the end of February, it became more busy, however, with insurance portfolios coming back into the market on the back of the rates volatility that we see.
What potential challenges did that create for your trading desk?
Transaction costs were in line with January, and taking December out of the picture, also in line with the costs we observed from September to November 2020. However, we did see a significant difference with the transaction costs realized in February last year. On average, we transacted at 2/3 of the transaction cost last month versus the same month 1 year ago. And then we went into the March sell-off, of course. Based on the access we got in, we did see the banks being more aggressively looking to buy bonds at the beginning of February compared to the end of the month. By the end of February, we did see EC volumes still being skewed toward banks willing to buy. But based on number of tickets, it was more or less balanced out.
You've been engaged in a number of projects on the trading desk in terms of automation and all sorts of interesting uses of data in trading. Can you tell us what are you engaged in right now to deliver best execution for your investors?
Given the lighter volumes that passed via our desk in February, we were able to kickstart 3 projects that we had been working on to add efficiency and liquidity. February was the first month in which we really rolled out rule-based trading for Euro-denominated credit tickets. For this, we are cooperating with the same platform that we are using for automated trading on the rate side. We did start off with the smaller tickets, 500K and below, and we are increasing the number of counterparties in competition slightly compared to our manual trading. The selection we do is done on different criteria, like screen prices, access, and other interests as well. And in order to maximize our chance of execution, we also allow for example, countering. We did put a tight price tolerance to start off with, just to be on the safe side. However, the first results were really, really good for us. Around 85% of our orders got executed automatically. We are now looking at our data to improve the selection criteria further. And we would expect rule-based credit trading to partially replace all-to-all as a means of execution for our smaller tickets. But we think all-to-all will remain our main method for execution for our dollar lot business, though.
So you're seeing use of lower touch trading as a potential replacement for all-to-all. Is that because all-to-all also takes the weight off your shoulders in terms of managing lower value trades?
Exactly. On our desk, the smaller tickets, we think all-to-all is a viable way of quickly and with a good result execute that kind of flow. But I do think rule-based trading is a better thought-through process than just sending your orders through to the whole market for everyone to see. I do believe that rule-based trading, putting less people in competition, would on the longer term provide better execution for the clients. We also rolled out our model-based counterparty prediction tool that was developed in cooperation with the data scientists. This one we will now test in production during the next few months and see how we can improve it further. The way it works is we receive both a pricing probability score per dealer as a dealer ranking for a given bond. And during the piloting, we did see promising results whereby we could significantly decrease our average pass rate. Additionally, we did see a high proportion of winners in the top-ranked brokers. The piloting did reveal, however, that the tool does not add significant value for our rates trading, but it is adding value for credit NEM. But we do expect the real value of the prediction model to come out in times of stress.
I've seen some interesting discussions about the use of different trading protocols, such as portfolio trading, on a bilateral basis and via platforms. Could you just tell us how you're engaging with that as a trading protocol at the moment?
We did some new analysis into portfolio trading. But for now, we do still favor the line-by-line execution methodology over portfolio trading for our type of business at least, and certainly for harder-to-trade baskets. We are keeping a close eye on the developments happening on the pre-trade side within the MTFs though.
Joeri, thank you so much for coming back on.
Thank you for having me.
I'd like to thank Joeri for his insights today, and of course you for watching. To catch our other episodes or to subscribe to our newsletter, go to tradertv.net.